Hi there, a very good morning, good afternoon to all of you, depending on watching me. Simply talks with another video, and this time this video corresponds to uh, the Diwali picks. So a happy Diwali to all of you. And these are the 10 stocks which in the next 4 to 5 years can make you very decent amount of money. That's what I feel. So fundamental analysis, a little bit of fundamental analysis on all these 10 stocks that I'll bring to you. First of all, disclaimer that this is not a stock recommendation. People taking any position to share that I talk about should be with their diligence and research. I'm not a member of the NSE and BSE, and that I'm not a portfolio advisor. Whatever discussions I have with respect to stocks and markets is purely on the basis of my experience over the last 14 years, 13, 14 years being in this market. Whatever I have done with respect to trading and investments, I want to impart that knowledge. Whatever decisions with respect to investments you take, kindly do take on note that it is market. Now, before I talk about these companies, a small request: kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions, seek out answers in detail. Once you get the $10 monthly membership, you get access to my portfolio, my watch list, discussions on domestic and global economies and needs, IPO, etc. Uh, Updated watch list, portfolios. Whatever I make changes to portfolio, you get it straight away. And whatever queries with respect to markets you have, I so become a member on Patreon monthly or on WhatsApp. You can become a yearly member. Well, you can send me. Now, in order to discuss about these 10 companies, I want to take you to the screener website. So the first company in this list is CAMS, Age Management. I'm very bullish on the, you can say, this theme of financialization, all the savings that people are having and putting money to the markets. And I think this is going to continue. Maybe the trajectory may change and the intensity uh, get increased, decreased over these 5 years. So, but the companies in this space should do well. So basically, what computer age management services or CAMS do is they provide the infrastructure or the infrastructure for all these exchanges to work, and they get businesses through that. So I'm going through a snapshot as to what these companies are doing. You can read in details as to how the companies have been performing over the years in terms of their business. But just to look at the numbers, the market cap of the company is around 22,000 crores. So it comes under the small cap domain. So basically anything under 30,000 crores today is what I consider as a small cap. So 21,000 crores. The PE is slightly stretched at around 50, 52. But if you look at the growth, then the PE will not feel that it is a lot. If you look at the numbers, then you'll see that this quarter, so they have come out with their September quarter numbers. They did 365 crores of sales versus 275 crores of sales. So a decent jump in that. But look at the operating profit: 122 crores last September, 44% margins. Compared to that, 170 crores this time around with 47% margins. So margins have expanded, which is very good, and it has been expanding over the years. So if you look at year on year numbers, it was 37% before pandemic, and now it is 40%. This is how you can say intensity of investments and say affinity towards trading and investments have gone in that the companies in that space, be it in infrastructure for these changes, are doing well in terms of profitability as well. They did 121 crores this quarter versus the last year September quarter of 84, a 50% jump. And that is why I believe that the PE of 50 may just be a norm for the next at least 2, 3 years, and then we'll see how the numbers pan out. I think this growth could continue. The stock has fallen from the top. If you that the highs were around 4,900, and today stock is trading at around 40 levels. Uh, Looks good in terms of you can say shareholding pattern. You look, yes, promoters hold none, but FIIs have around is 6.5%, DIIs hold around 18.5%, and public shareholding is around 25% is quite decent. So overall, a very decent company at this market cap. That's CAMS for you. Second in this list is CDSL. So again from the same domain, but a different company. So this is the depository, and that has been doing well. I think these kind of companies should do well irrespective of the market condition. The market may not perform that well over the next 5 years. If there might be from the Nifty, but companies such as CDSL, BSC, CAMS, etc., may end up performing well. So BSC is also in this list. CAMS, a 31,000 crore mid cap company, trading again at 55, 57 times. Uh, have it come out with its September numbers? It has. So if you look at the numbers, then sorry, CDSL. So CDSL has come out with their September quarter numbers. And if you look at the numbers, 322 crores of sales versus 207 crores. So that is a decent jump of 50% in terms of sales. 128 crores of profit last time around has jumped to around 70% growth to 200. Around 60% growth to 200 crores. Margins have remained stable at around 62%, and bottom line has also swelled up. So this growth is just continuous. If you look at it in March 17, even before that. So from March 15, they did 105, March 16, they did 120. Not a great growth. Then it slightly moved up to 146 in March 18, 88 was stable. But even in March 20, if you see, 225 a growth of 10%, 10, 11%, and then the growth just ballooned. 344, 550 remained stable here, then 810, and now it is expected to be even more. I think this is going to be around 11, 1200 time around. There's 800 crores last time around. So I think this trajectory again going to only, or intensity is only going to increase going forward in terms of shareholding pattern. Yes, there's a concern that promoter hold 15%, FI is 13% shareholding greater. But even in that public shareholding, there are large investors invested in there. This is the company also over the next 5 years could give decent market beating returns. Third in this list, if you see, is Glenmark. So third in this list is Glenmark Pharmaceutical. Now, although you don't see a PE here, this is because of the fact that they were one-offs the last time around in the last 4 5 quarters, and so the numbers not project as to how is panning out. A company in the pharmaceutical domain, Glenmark, uh, has been doing well in this field for many years, but over the last 1.5 years, they had some write-offs, so that's why the PE doesn't see there. But largest and fastest growing in the Indian market is Glenmark Pharma, largest generic company by prescriptions filed in the US. That's how company has done in terms of products. Company offers a wide range of pharmaceutical products in the form oral solids, liquids. You have topical products, respiratory products, etc. In terms of their geographical spread, India is around 25% of their business. North America is around 25%. Europe is around 18%, and rest of the world is 21%. API domain contributes around 12% of Asia Pacific, sorry, is around. Uh, so there was a one-time impact that I was talking about in FY24 9 monthly. Company had a one-time impact on India business revenue as the company implemented changes in its overall distribution model through consolidation of stock points and rationalization of channel inventories, and that's why their business suffered a bit. And in FY24, they could not do that well compared to the years. So in FY24, you see here 11,800 crores versus 500 crores. Margins dipped from 10%, and they ended up having that impact. And loss, but Glenmark has ended up in say performing better in the last 3 quarters. So if you look at 2,500 crores in December 23, but then 1,000 crores, numbers have started trickling in 16%, 18% margin, profitability on the bottom line. So coming in. So this is just the tax expense that came in otherwise coming in. I think over the next 5 years, this could again find its mojo completely in terms of numbers, and again can give you very decent returns. It is a mid cap company, it's a very small cap company, 45, 50 cap. Reasonable valuations at the moment because the stock has come down from top of 30. It's currently trading at fourth in this list is Zomato, and we have seen how the numbers have panned out. So again, the stock has gone up 6x from the lows last year. So I don't think it's going to give you same sort of return. But again, a disclaimer: this might be in my portfolio. Some of the stocks might be in my portfolio, so that's a disclaimer for all of you. But I believe that 20 to 25% CAGR growth is very much possible over the next 5 years in terms of stock price. From from Zomato. So that is quite decent considering that Nifty might not give you more than 10-12%. That's what I feel. 5 years kind of move you've already seen. So Zomato is something to look at again. If you we all know about the company, let's just come to the numbers. 4,800 crores in September. That's what they did versus around 2,850 crores. That is the kind of jump. So if I take that into account, that's a 70% growth in terms of sales. Profitability has come in big time to 26 crores this time around, and net profit has also come in uh, versus very slight net profit last time around. So the growth is phenomenal in terms of operating profit, etc. And if you look at the shareholding pattern as well, we had around 15. Earlier, it was around 7-8% FI holding, around 10%, then 30%, and now on to 17% last uh, filing of the company. Public shareholding has reduced from around 33. Pretty good, even in that 29%, 13.5% is within for it. So very decent numbers in the company, and it is in the large cap domain as well. So safety net is there to like 20 market cap, currently trading at 12, 13 times 12, 13 times sales, which is pretty decent for a new age. Another company that to look at, and if you look at the chemical sector, is Sudarshan Chemicals, another company that I have in my. That's a disclaimer. But Sudarshan, in my opinion, with that Hubeck deal that they have done just recently, could do extremely well. Although after the deal went up and then fell, the numbers now. What does Sudarshan Chemicals do? So Sudarshan Chemical Industries manufactures and sells a wide range of organic and inorganic pigments. So these are different kind of pigments, chemicals that they sell that has uses in many industries, not just one or two, but they have a market position is the third largest pigment manufacturer globally. In FY24, it was 35% market share, and after this Hubeck position, it would become probably the largest in the pigment domain, which is extremely good. The company's product portfolio is a lot in terms of product segments. Specialty revenue is around 59%, non-specialty percent. In terms of geographical split, 58% of their business comes from domestic, 42% from exports, and it exports products to 85 countries with 50 plus sales points. The revenue mix is pretty good. So very decent company in all regards in terms of what kind of market cap it has. It has a 6,000 crore market cap, so a very small cap company, but very strong management, debt free company, and had a pretty good deal of Hubeck. So that's why I believe over the next 5 years it could end up doing revenues which is uh, at least 30-40% more than what it is doing today. So 696 crores, it did around 16% jump in revenues from 66 crores. Profit has gone to 94 crores, so that's a good 35% jump. And margins from 11% has grown. So very decent numbers. The stock has come down with the market, and from around 1200 rupees when the deal was announced, the stock is back to 900 rupees. Very decent levels to accumulate the stock in terms of shareholding pattern as well. If you look, is hold around 8.5%. DIIs hold around 19-20%. The promoter shareholding is less at around 30%, but in terms of public shareholding also, there are large investors. If you see here, around 15%, 16% is with large investors. So basically 25% free float, which is not a lot. And although it is a small cap, so be careful, have less investment in here. But over the next 5 years, company should end up sixth in this list is BSC, similar to CDSL and CAMS. I think BSC should do well, although the stock has run up, trading at slightly stretched valuations. A mid cap company in the domain, 7,000 crore. So the exchange, and with the NSE listing coming up, probably in a year's time, NSE listed in list. I think BSC should end up garnering more customers, garnering more revenue with the kind of shift in terms of investments and the mindset that the young generation is having. People who are between the age of 23, 24 to 35, they are getting into the market. So hopefully BSC should end up doing well. Uh, Again, in terms of numbers, although their September quarter number expected on 12th of November, in terms of June quarter, there is 670 crores versus 60 crores. A huge jump, 140 profitability. Root was swelled up to 3 crores. Margins from percent. Clear monopoly. Two companies hold probably everything in this in business, or duopoly kind of a business here, which is doing well, which is expanding, and with the kind of diaspora that India has, and the kind of shift that in terms of investments that people are having and getting in stock market, and with more people getting in there over the next 5 years, I think this company should do pretty well. So that's also in here. Similar to this is MCX. I believe Multi Commodity Exchange is one company that should end up doing extremely well. Again, 34,000 crore market cap company, trading at 96 times. But with the way the numbers have come out in this quarter, I believe that the earnings would be around 100, 95 to 100 rupees for FY 25. That's what I feel. From an earnings perspective, from March 24, they did around uh, what was the EPS? In March 24, they did 16 rupees, but I think in March 25, they're going to do 60, I would say northwards of 100 rupees. So and that is why, if you look at the last two quarters, they did 21 and 30. So they've already done 52, 51, 50. Yes, 100 rupees EPS is very much possible this year. That's why I believe that it's only trading at 60, 65 times and not 100 times, which is very reasonable. If you look at the PE of the company on an average, it's around time 40, 45 times year basis. On expected earnings of the next two quarters, TX is trading at 60 times, which is reasonable on any dips he accumulated. And with is getting increased and the kind of taxes getting in terms of options trading, etc., uh, then I believe that people will shift more from equity intraday trading to commodity trading. In commodity trading, I think this was a big thing in the late 90s, in the mid 2000s. I think that fashion will come in. So over the next 5 years, the company is going to garner even more revenues going forward. Again, a monopolistic kind of a business which has little effect of the global economy, etc. This is set to do. Next on the list is Natco Pharma, another of those pharmaceutical company, 24,000 crore market cap. Now, this is interesting. The stock has fallen sharply uh, in the last 2 months. In the last 2 months, the stock has down from around 1600 levels all the way to 1300. It has come down by around 20%, 15, 20%. And the valuations look very interesting. If you look at the PE of the company, then the stock is trading at around 14, 15 times. It's very, very interesting. The numbers have been pretty strong. June quarter numbers, September quarter numbers will come in on 12th of November. 1360 crores in June this year versus 1140 crores. So there has been a sales growth of around 17-18%. Margins from 46% grew to 9% and profitability from 528 crores grew to 805 crores. Look at the EPS, 7.3 rupees this time around versus 23 rupees. So already they have done something like 59 rupees for 2 quarters. So set to do around 110 rupees EPS. This year. And so I believe that the company is trading at very reasonable valuations of around 13 at a PE of around 12, 13, which is very reasonable. I think can end up making good amount of money over 5 years from Netco into the CDMO business that the company is in. 17.5% by holding 7%, DII holding public shareholding, very decent company. Last two companies are in the, you can say, the consumer domain. Now this is the consumer sector or sector in which there's a lot of slowdown at the moment, but these are the times where one can really invest into these companies. So Blue Star, that has done extremely well over the next 3-4 years, I think can do even better going forward because of the penetration of the market. Less penetration at the moment, and the penetration is going to get even better. So as we all know, into that corporate AC and into domestic uh, domain as well, currently trading at 70-75 times earnings, and systematically invest into it, but has come down sharply around by around percent from top, uh, and the PE has gone down now to 75. Normally around 70 times, 65 times it bottoms out. If you look at the numbers, the September quarter numbers would be out by 6th of November. But if you look at the numbers altogether, 2865 crores in June quarter was 100 crores. That was a nearly 30% sales growth. 145 crores in last June, and this time around they did an operation of 240 crores. Margins have which in a very competitive industry is the big achievement, and eventually net profit was versus 83 crores, so doubled, net profit doubled, and that's why you are seeing that the EPS growth is pretty good. We have to look at this quarter numbers, but numbers are not quite good for the other companies in the white goods domain. So wait for the numbers and then probably again invest systematically into it over the next 5 years. Company should end up doing well in terms of shareholding pattern. 18% with FIIs, 23 AIs, and 22-23% is public shareholding. So a decent FII DII investment, decent company, very good business to look at from a 5 year perspective. Last in this list is Ethos. It is in the luxury watch domain and has been performing well apart from the last quarter. And the stock has fallen from 3,500 all the way to 700. There has been a decent decline. Again, I want to say that this is in my portfolio. Some of the other stocks might be in my out of these 10. Them currently trading at around 65-70 times. And if I see the earnings growth of the company, then 273 crores of sales versus 2 crores, and around 20-25% operating profit growth, similar growth on the net profit front. And this is something that is going to grow even further 5, 10, 15 years down the line. So this is why I brought up in this list that 6,500 crore market cap could grow substantially over the next 5, 6 years because of the luxury space domain that for this period. So that's why I brought this up. In terms of shareholding also, there's 15% say a DII holding, 12% FII holding. So decent in that. This is something of a company in which you can invest 2-3% of your holding, and let's see how good this could be. This could be multifold over the next 7 to 10 years. Could be pretty good over the next 5 years. So this was a video on 10 of the stocks this Diwali for the next 5 years. Please like and subscribe my channel. Like and subscribe.